Good afternoon, guys. It's working. Bring you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. It's going to be a quick video today, guys. I've got to get running out the door. I wasn't even going to make a video, but here I am. Just very, very quickly, guys. This is going to be more of a bottom line video. Looking at the 4-hour chart on Coinbase. Last time we spoke, guys, Bitcoin was sitting, actually had just broken back up from testing our ascending support line here. We're sitting at about 9,900-ish, somewhere thereabouts, guys. I did tell you if you did take that swing trade, was likely a good time to sell, and of course, it ended up crashing down there very, very shortly. Testing the bottom again, putting in a decent base down there. Once again, confirming that ascending support line is to be respected. Coming back up here, hitting about where you would expect. If we kind of look at this overall pattern here, we can see that this prior high here was an area of support in the past, turned into resistance here, and of course that's the target that the price did hit at about 10,150-ish, somewhere thereabouts. Coming back down, testing 9,950, guys. The longer we go on, the less 9,950 does become relevant. We'll have to, assuming that the ascending support line does hold up, we'll have to wait and see kind of how this plays out. It certainly is relevant as of right now. Whether or not it remains that way, I have my doubts. To me, it does look like we very likely will come back down, retest the ascending support line here. From there, I'm either going to expect one of two things. I'm going to expect, remember, every time you test a support, it typically gets weaker and weaker. So I'm going to either expect a breakdown, and then we're going to be looking at 9,400. And as you guys know, as I told you last time, I have my doubts whether 9,400 does hold, even though that really is going to be your last hope, obviously, before breaking down to 8,900, potentially 8,500 down here, which will become a very real possibility if the ascending support line does break down. However, it is also very possible that we get another bounce off of this zone. We have put in a decent area of support down here, what should be potential support down here. We'll have to wait and see if it actually gets confirmed as that, but does look like potential support down here. If that is the case, I would expect it to break back up. Would be again looking for a target of at least this 10,150. Could it bounce at 9,950? It could, and if it does, that would be a very bearish sign, and at that point I would think we'd be bouncing back down and taking out the prior low, or excuse me, the ascending support line. But assuming that we break up above it, I do think it retests on a bounce down here, and again, that's a big if. It's a big if, but if we do bounce, I would be looking at a target again at about at least 10,150-ish, somewhere thereabouts. If you want to be very, very cautious, I'd get out of that 9,950 again. But on the second test, guys, I wouldn't be surprised to see if us break up and test 10,650, prior area of resistance back here before we did end up breaking down in this little bit of a channel here. I wouldn't be surprised if we did that at all. It does kind of look like, if we look at the looking at the 4-hour here, it does look like the 4-hour, we are consolidating. We're getting all the 55, 21, and 8 exponential EA all kind of converging on each other here. Does look like we may get the 8 crossing above the 21. If that does happen, that'd be a temporary bullish sign, but we're also seeing that the Bollinger Bands are starting to converge. So that would suggest a larger move. And in this case, guys, could that be to the upside? It could. It certainly could. Again, we'll have to wait and see kind of how this ends up playing out. But yes, that it could potentially break to the upside here and resolve right around 10,650-ish. We could also be, as I pointed out yesterday, guys, and I don't want to rule this out because as of right now, it shouldn't be ruled out. We can see that we have this kind of, if I zoom out to the daily, I chop off the wicks here, we can see that we're just looking at the bodies. We do have a nice descending resistance line here, and if I do the same thing with the wicks over here, we have a kind of a descending support line as well, potentially looking at a falling wedge here. I know I pointed this out yesterday, guys, but that is still a potential area of interest. And of course, if we do end up breaking down here and breaking down quickly, then of course that would validate. Yeah, I mean, in my mind, it really would almost validate this potential for a falling wedge, and we'd be looking for a target down here at 8,900 at least before reversing course. Again, we'd have to wait and see how it plays out. That being said, in the next 48 hours, we should know. If we move sideways here, and if the ascending support line does end up holding, then of course I'm going to be looking for that $10,650 test. If we break above 10, if we do a decisive break, and at this point I'm looking at a daily, guys, I'm really not as concerned with I'm more concerned with the overall macro trend here. I'm more concerned with the mid-level trend here. If we do get a daily open and close above 10,650, I will be looking for a move up to 11,500, potentially at least 12,000. If we break above 12,400, as I told you before, that's going to break us out of the consolidation area. Again, just looking at the bigger picture here, especially if I look at these as a potential, if I just draw a wick to wick. Now, we've only had 2 tests here, so again, I don't put a lot of weight on this, but if I do just draw wick to wick there, and of course we look at the overall ascending support line, we potentially have one massive wedge potentially forming, and that would suggest driving back up here and testing about 12,400-ish, depending on where it is if and when it does get up there, possibly lower than that. Now again, we are not anywhere close to there yet. Again, we've only had 2 tests with just by a wick here on the daily, so I don't put a whole lot of emphasis on that or a whole lot of faith on that. And you could also draw out something like this, where I just use the body, and we'd be even coming much, much lower. That's also a potential area of resistance as well. It really is, drawing these trend lines can be a little bit more of an art, and it is kind of I don't want to say crystal ball-ish, even though it is kind of crystal ball-ish, but it's really once you start once you start trading more and more, you'll start to see these patterns or potential for patterns forming, and then you'll kind of get an idea when something happens. You can kind of say, okay, that's it. Now I can see, now that overall vision that I had of possibly coming to fruition is now coming to fruition, so I have a much better idea of what actually is happening. Or you can say that idea that I have is completely shot. This is not a falling wedge by any stretch of the imagination, and we could potentially be coming up a little bit higher here in the short term, but at the very least I can rule that out. So it really is a bit more of it is technical, but it's also a bit more of an art, as I was trying to explain a little bit more yesterday. So bottom line for you guys, in the short term here, I would be looking for a test down at this ascending support line again. If it does hold, I would be looking for at least 10,100 or retesting at 10,150. But again, if that does break, we'd be looking at least 10,400. If not, again, testing 10,650. And if we get a daily open and close, even if we get a daily close above 10,650, that could change the mid-level trend. The macro trend will still be consolidation. The micro trend, of course, would be up, but the mid-level trend would also tend. I'd be starting to pick targets to the upside again. 11,050, 11,500, potentially even 12,400. That'd be the upper echelon of the target. I don't think that would happen. But maybe 8,000 to 11,800 ish. But we got a lot of work to do before we get there. Checking. We discussed the 4-hour. Let's look at the daily. Looking at the daily, we did have a confirmed break of the 50 exponential yesterday when we had the open and close of the daily candle. So that is a confirmed break, even though we are coming back up here, guys. I do think that the overall, as of right now, we have not shifted that mid-level trend. The mid-level trend is still down, even though we are kind of correcting to the upside, and we could correct all the way up to that $10,650 zone and still keep that mid-level trend to the downside intact. It's only when we break above that $10,650 zone that I will start to think that mid-level trend could be shifting back to the upside, and I will start to look for targets back at the upside here. Looking at the weekly, we are still defending that 8-week EMA. As discussed, guys, of course, we wicked below it, but we are still defending that 8-week EMA. And if we can close above that 8-week EMA for another week here, guys, I do have to start thinking that maybe this consolidation is going to come to an end here very, very shortly. And we could potentially be heading back up. Now, in the short term, I would call that healthy. Of course, we'd be looking at targets at least at that $13,850 zone, at least taking that out, if not that lower 16,000s. But for the overall macro trend, I would still be looking for a larger correction, because I really want to see a weekly close below that 8-week EMA, as we discussed a couple videos ago, to really put in a nice correction, a nice bottom. I mean, I really would like to see us sweep that mid $8,000 level before I'll get very comfortable about price just skyrocketing here. So if we take off from our current price point, I'm still going to be looking for a much larger correction, somewhere between that high at 13,850 and 16,200-ish, somewhere in that area. So again, let's just wait and see how this ends up playing out. The overall macro trend is not threatened at all by any of this, and it will not be threatened until we do take out the mid 7,000s. 7,500, that's when I'll start to think the macro trend is very, very much in question. As soon as we take out 6,500, I will start calling a reversal, and I will start looking for targets to the downside on a macro level. So kind of give you an idea of what I'm looking at, what I'm thinking with that. All right, guys, I really do have to get going. Let me quickly go over your questions here. Mr. Sylvia says, thanks for the demonstration. My specific question actually was what source you were using when when setting the 8 EMA. As I watched, I noticed you leave it on close. Yeah, always leave it on close. I personally always leave it on close. I don't know anybody that uses anything other than close. Some bots do for various reasons, which I could get into maybe on another video. And it's not that it doesn't. If you really want to go down the rabbit hole, man, yeah, start looking at different things on different, on the high, on the low, and then trying to figure out bots. Man, you can find yourself in a massive rabbit hole that it may not be, you may not recover from. But yeah, most of the time, time, most people, in fact, 99.9% of people are talking about keeping it on a close. Miguel says, thank you, working great analysis. Thank you, my friend. John M says, could you talk a little faster? I get the sarcasm. Cut back on the caffeine. There is often a move with higher. There is often a move with higher volumes in the evening on Eastern time. Any idea what the source is? As far as it, China or Asia trading in the mornings, or rich young yuppies trading after work in the evenings. Yeah, I'm probably not going to talk any slower. So sorry, man. Maybe listen to it on 0.5 or half speed or something. I don't know. But yeah, probably not going to talk any slower, man. But as far as the higher trading volume, I don't really. Let me just throw the volume on very, very quickly. And you said at the end of in the evening, so let's just say it's typically, I think the daily candles close right around 5 p.m. Eastern Standard Time. You referenced Eastern Standard Time, so let's just look. We can just look at the at each day here and see if we get a volume spike right before. And this is basically, and really, that's in the midday. This spiked right as it was closing. I really don't see it. I mean, maybe a little bit, but yeah, I don't. I mean, as far as what I can tell you, everybody's looking at the one thing about that is everybody is, remember, the daily candles close. I believe it is 5 p.m. Eastern Standard Time, and everybody looks at the same time frame when it with regard to that. That's of course midnight Greenwich Mean Time. So am I doing that right? Actually, let me see. Let me zoom in here on the hourly to make sure. Yeah, I mean, obviously it's Greenwich Mean Time, but I think it's man, I'm in a different time zone right now, so I'm totally getting. I think it's 5 p.m. Eastern Standard Time, regardless of whatever it is. It's somewhere in that evening time, Eastern Standard Time, when the daily candle does close. I believe it's 5 or 6 p.m. Eastern Standard Time, if memory serves. So. My point is, if that's when you're talking about volume spiking, the thing that you might notice in a spike in volume is people trying to adjust the way the daily candle does close at the end of the day, since everybody is looking at the same time frame for a daily candle closing across exchanges. So it would happen at the same time every day with the daily candle there. So people trying to influence the daily candle's close, possibly that's why you're seeing volume flood in, or them thinking based on the way the daily candle is closing, they're going to they want to make sure they get in their trade or their confirmation bias. So yeah, I mean that's really the only thing I can tell you as far as why that would happen. Otherwise, it's just pure speculation, man. Yeah, you can go round and round that forever. Cal says, I told you. Not sure what you mean, Cal. 880 says, the CME gap has become like a 6.4K resistance. Everybody was adamant would be hard to break when BTC was in the 3 to 5K region. All we know, and we all know what happened there. Yeah, you're right. And as I answered you there, you're absolutely right. Everybody was looking at it, and therefore it didn't happen. I think, as I explained a little bit, I think what might be happening here, and it's been going on so long. What might be happening here is, is similar to that, or similar to where everybody kind of learned from that. Now everyone thinks they're a genius, right? Everyone thinks, well, now because I know that because everybody's looking at something, it might not happen. And since everyone's looking at 8,500, it's probably not going to happen. Well, then you get to play devil's advocate and say, well, if something's not going to happen because everyone's expecting it to happen, and now everyone's looking at the same thing, and because everyone thinks everyone's expecting it to happen, everyone is not expecting it to happen, then everyone's not expecting it to happen. And if that's true, then to follow the same logic, it should happen. So as I've been talking about, man, it's really, you can find yourself, again, another rabbit hole. I would just say that 85 to 8,900 is a relevant zone. And might it get front run? Might it get overshot? Absolutely. But it also might work out exactly like you expect. And at this point, as I said, I'll be looking to add to my long position in that area. That's all I'll say. TBD says, hey, working great update as always, but wanted to point out a decisive break above or below requirement. By the time you wait for a decisive break on the 4-hour or daily candle, you often miss the trade as BTC is too volatile compared to traditional markets. Is there other indicators other than volume you look at to identify fake outs, bull or bear traps? Really appreciate your efforts and videos daily. We'll appreciate more if you do more often is what you're trying to say. Updates, even if it's just a written update with no video. Happy trading. Hey, happy trading to you, my friend. And yeah, I try, man. As I said, it's really a difficult balance between. I really enjoy my free time. I enjoy my anonymity, and I enjoy just kind of when I'm trading, and I am just stuck at that. When I do these videos, I try to give you my all for this small amount of time during the day that I choose to do this as a way to give back to the community. And when I'm spending time with my family, I try to give that my all. So it's really difficult for me to kind of divide that up and try to constantly be in touch. And it's just not, to be honest with you, it's not something I really want to do. And I know I don't mean for that to sound harsh. It's not. Everybody's got to prioritize what they're doing here. It's not my priority right now to create the biggest YouTube channel. As I said, I make no money on these videos. I really don't. If and when I start doing that, maybe I'll put a little bit more priority into it. But that's really not my goal. So I really don't push towards that. My goal is just to give back to the community. That really is my goal. I have no alternative motive or anything else, as much as people try to read into why I do this. That's it, man. That really is it. I truly believe in karma. I'm getting off on a rabbit trail. My point in all this is, maybe I will, maybe I won't. If I think about it, I will try to give you updates, but it really is, trading can be all consuming for me. So again, when I'm not trading, I try to just take a break. I really do. But we'll see. I may do that. As far as what to look for, that really, I discussed this in other videos, and you're right. You can miss a move if you're waiting for a decisive break. You will often miss a move if you're just waiting for that decisive open and close. But it also will make sure you don't get wrecked. And the moves that you do catch will be more winning trades, and that's all the trading is, having patience and getting more wins than losses, right? So other than that, what I look for, obviously, and you'll start to see this as well as you become more and more of a seasoned trader, you look for the setup. So, you look for things like, as we've seen, things like we saw back here with an ascending triangle, like right here. That gave you, before we broke out here to this 11,050, we did have a bullish posture, a bullish setup here, giving you an ascending triangle, which would give the nod heavily in favor of at least testing that $11,050 target. And of course it did. So if you front run it down here, waiting for the breakout, instead of waiting for the breakout, it would make sense. And of course we had a bullish posture with a potential inverted head and shoulders that ended up being kind of a fake out there. But nonetheless, you had that bullish posture set up, and that would indicate at least a break up to 1150. So you had some reason to front run that other than a decisive break. So there are a lot of things that you can look for: the micro trend, the macro trend. Are you getting divergence? Are you getting hidden divergence? Bearish divergence, bullish divergence? All these things can go into whether or not you decide to front run a move. I would just say anytime you do front run the move, make sure you have a stop loss. But if you just do those simple things, to either where you have a lot of patience and you wait for a decisive break and know you're going to miss sometimes, or if you do choose to front run based on some bullish signals like an ascending triangle or like bullish divergence there, if you choose to front run it, just have a very tight stop loss. Even if you do get stopped out, you'll still end up winning more than you lose, and you'll minimize your losses. And that's all it is. It's when you lose, you minimize losses, and when you win, you make sure you don't get greedy. And that's all. And then you just make sure you have more wins than losses. And that's it. Trading is really that simple as far as the psychology of it. Now, of course, there's more to it when it comes to the technicals and that type of thing. But it's not even true. There's a lot more to it when it comes to psychology. But as far as risk management, it really is that simple. You minimize your downside, you maximize your upside, but you don't get greedy. In other words, once you hit your target, you either increase your stop loss or you get out of the position and you say that was a nice trade and moving on to the next. You don't say, well, it might go higher. It might go higher. And then as it goes lower, you just, well, now I can't go because, I was in profit. What happened? That becomes you'll become your own worst enemy psychologically. All right. I really do have to get going here, guys. Sam says, maybe if you have time to show why at certain times the price hikes up due to bullish divergences, I would like to know what to look for in divergence for confirmation, i.e. time frame, and what candlesticks should look like. I believe this is key to making very quick trades. Maybe a video or a quick website that can assist. You can Google as far as divergence. If you're asking me what is divergence and what is bullish or bearish divergence or hidden and not hidden divergences or divergence, I've touched on this before, but basically, I think you must know what divergence is at this point. Are you asking when it's confirmed? Like, what would be a confirmed divergence? If you're asking me when it's a confirmed divergence, then I would say, for example, let's look at divergence here. Let's see. This was in an overall downtrend. If we were looking at from this point here to this point here, you'd have to agree we were in an overall downtrend, right? We're looking at the 4-hour, and from this point to this point, price created a lower low, right? Now let's come in here and look at the, I'm just going to look at one indicator to make it simple here. Let's look at the MACD because it's a little bit cleaner. So if I look at the exact same point as on the MACD created a higher low here, right? So that would be, since we're looking at a downtrend and I'm looking at the bottom side, that's regular divergence. Okay, and obviously in this case, that's going to be bullish divergence because we created a higher low on regular divergence on the MACD, a lower low with price, a higher low with the MACD on the bottom side of the MACD in an overall downtrend. That's regular divergence. Your question is, you could see that regular divergence since price broke down here. So your question is, at what point does it become confirmed divergence to the point where you should trade off of it? And I would say, let me give you two answers. First of all, the technical answer. Technical answer is it gets confirmed once we've put in a bottom here, and then that bottom is confirmed by the next candle closing, since this is a downtrend, closing above the open of the prior candle, which means that would be the confirmed bottom there. Once you had that closed there, now you have a confirmed bottom. Now you have a confirmed bullish divergence, and then of course you would look for targets to the upside, which you can see where price did end up breaking up here. And so that's where it would be technically confirmed. Now, as far as confirming it for your trading purposes, that's where it gets tricky, because yes, oftentimes my most successful trades, I do front run divergence even when it's not confirmed. And this is where I think a lot of people do injustice. You have two extremes here. You have the people that are divergence, usually the newer traders that are calling everything's divergence, everything, no matter what it is, all divergence, 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 and you end up missing things more often than not. And I would say, once you start closing candles right beside it, even if it's not necessarily confirmed, like this candle was here, you can start to see that it does look like it does look like we're putting in some support, even though we may not have had put in the ultimate bottom. We are getting some. We are getting basically the knife has stopped falling. It's starting to slightly consolidate, even on lower time frames. You're getting some consolidation, even if not divergence. And even though you haven't yet had that divergence confirmed with a bullish engulfing candle in this case, because we are in a downtrend, you still can see that it looks like we're putting it at the bottom. And if that bottom does get put in, you can see that we will have confirmed bullish divergence, and you just decide to front run it. I very oftentimes those are my most successful trades, even though technically we didn't have confirmed divergence. And of course, anytime you're going to front run something, name of the game in front running is you have to accept it if you are going to lose, and you have to have a very tight stop loss and accept the stop loss. And yes, so if you if you're going to front run something, then be man enough or woman enough to put in a tight stop loss and to minimize your risk if it does end up not going south. Because it will. Sometimes it will go south. Remember, the name of the game is to not always win. It's to have more wins than losses. All right, I'm going way too long. Let's see. Crypto Catch says, love the videos, brother. Thank you, my friend. Robert says, how about some live streams? We'll see, man. We'll see, Robert. I see Tim jumped in on that one, man. Good to see Tim on the stream, by the way, man. By the way, if you guys aren't part of Tim, Trader and Investor Mentor Market, it is a phenomenal site of where investors and traders can kind of come into a place to collaborate. I highly recommend, if you guys aren't part of Tim, it's free to join, man. It's a Steam-based platform. Join. I'm on there. I post there every single day. You can find the link it's called Mentor Market. In fact, you can find the link in the description of every single one of my videos right here. You can see read my full analysis on Tim, and gives you mentormarket.io. Go there. You can find my analysis along with a lot of other people's analysis, guys, not just in the crypto markets. Now, I mean, I just do crypto, but other analysts also do other markets on that stream, and a lot of them are just phenomenal analysts, guys. So yeah, I would highly recommend, if you guys aren't part of that, jump over there, man, and let them know that I sent you. But that being said, let me get back. Am I going to do live streams? And Tim knows I'm not. I've talked with this about Tim. I really, when I start talking off the cuff, unless I can edit myself, I say things that I wish I hadn't. And I very much value my anonymity for very many reasons, which Tim also knows, which I'm surprised he's jumping in here. Maybe he's just throwing it in my face. I don't know. But anyway, it's I might do it one of these days. We'll see. As of right now, I really don't have any interest in doing it, though. I really don't, man. Sorry. CJ says, another great video. Thank you, CJ. Joe says, spot on. Thank you, Joe. Kevin Robert says, bought some Litecoin when it got really boring and BTC was around 9,600. Thanks to you, my man. We'll send a tip. Hey, thank you for the tip, my friend. And it's not thanks to me. It's thanks to you. It really is. You're the one that did the training, so don't thank me, man. It truly was. You're the one that did the trade. You're the one that took all the risk. I mean, I took no risk. You chose to take the risk. So congrats, man. You get all the credit on that. ALS says, thanks for working. You're the best. Thank you. Jonathan says, thanks for your great work working. Do you trade other markets, and which one? Used to. I mean, used to do just traditional stock market forex, but no. Right now, mostly just crypto. I do believe that's where the volatility is, and which means that's where the money is. Tofu91 says, not the best timing, but it's not your fault. Clear rejection off the 1 hour from 99 to 9,500. Yeah, it happened right after I posted that video, and yeah, man, just yeah. Hopefully, I'll try to get it up quicker next time. We'll see. But all right, guys, I'm gonna go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, appreciate an upvote if you have enjoyed this content, guys. Please remember to like, subscribe, hit that notification bell. Till next time, guys, please trade safe. Take care of yourselves. This is Working, signing out.